Thank you, Jerry, and it's a pleasure to be presenting again at the RIU conference, and thank you for hanging around for the late sessions. So it's been a busy 12 months for ROX. We've announced a large resource upgrade to our flagship UME project in Western Australia. So the resource for that project now sits at 3 million ounces at just under 4 grams. We announced that in January just gone, so about 4 weeks ago, or 3 weeks ago. The 3 million ounce project importantly contains a high-grade underground component of 2.2 million ounces at just about 7 grams, 6.9 grams. The resource remains open along strike and down dip. And in fact, we're discovering new parallel lodes. 39% of that resource is in the indicated category, which is drilled out on a 40 by 40 metre spacing. And then we're busy this year converting the inferred component of that into indicated as well as growth drilling. Metallurgy at UME has been an interesting workflow for us over the last 12 months. So we've cracked the nut in terms of the sulphide ore bodies which occur at depth, that high-grade ore body, with the Albion process showing 92+% gold recovery. We're now trying to optimise that and are having good success with doing that. So from here, we're working on feasibility studies at UME, and you'll see a scoping study come out in April, and then a more definitive feasibility study late this year. ROX trades on around $30 per ounce in the ground based on the UME resource. So just a quick snapshot of ROX, 158.9 million shares on issue, market cap of 70 million, cash at the end of December 5.6 million, and that followed a substantial spend last year where we, to achieve that resource upgrade. We're well supported by a few institutional shareholders. But we do have a fair spread of shareholders given ROX has been around for about 20 years. So just looking at our, checking in on our valuation, I suppose. So as an explorer, looking at comparable explorers, our valuation compares fairly favourably. So we're trading on that $30 an ounce that I mentioned versus an average across our relevant spectrum of around $100 an ounce, and we believe that's a good entry price, and it's set for a re-rating as we move the project to development. So ROX has 2 projects, UME and Mount Fisher. However, I've only really got time to talk about Mount Fisher today. UME today. So we'll leave Mount Fisher. There's more information at our booth if anyone's interested. So ROX holds the UME Gold Project in a 70/30 joint venture. It's 135 kilometres southeast of Mount Magnet by road. It's a past producing mine, produced 670,000 ounces between 86 and 97. It shut down when the gold price was $400 an ounce Aussie. It's a high-grade mine. The last parcel of ore mined from underground in 97 was 14.5 grams. So that would be making very good money at today's prices. So just turning to the mineral resource, given that it's new news from January. So you can see in the chart on the right-hand side there just the evolution and the resource growth at UME. So substantial increase driven by drilling. We use a 3 gram cut-off grade for our deepest resource, which compares favourably to the sector. That growth reflects 50,000 metres of predominantly diamond drilling over the last 18 months, but 35,000 metres more recently. We're discovering ounces at UME for $7 per ounce, which compares very well to industry averages. Importantly, that this resource and the increase to this resource has added ounces over key mining depths, so over 200 to 500 metres depth in terms of underground mining. So that was an area where previous mining had taken place along strike, and it was a very useful place to add ounces, so that was one of our focus areas. So just looking at the UME resource in a bit more detail, this is a long section, north to the left, south to the right. You can see that a large change in grade at 160 metres below surface. That really reflects how we split the resource at UME up. We split it into a near surface resource, which has a cut-off grade of 0.5 grams, and then the deeps resource cut-off grade of 3 grams, so therefore the average grade is a lot higher. The resource extends down to 1,000 metres, almost 1,000 metres below surface, but the majority of the ounces are between surface and 750 metres below surface. So we're looking at an open pit and underground operation here, and we'll be mining, mining and processing that material concurrently. We envisage a start with a cutback to the existing open pits and a portal at the northern end, or the left-hand side of that figure, getting into high-grade areas in the middle of the figure fairly quickly. Also to note in this figure, you can see the previous resource outline, a dotted outline, and then the new resource is these colour-coded blocks, coloured by grade. So anything red or hotter is above 10 grams, and anything brown or better is above 6 grams. So our average ounce inventory per vertical metre is 2,900, and that is a rough rule of thumb in the WA gold sector. We know that 1,000 ounces per vertical metre probably makes a mine, 2,000 ounces probably makes a good mine, and 3,000 ounces makes a very good mine. So 2,900 ounces per vertical metre is a number that we're happy with, and indicates where the conceptual economics are going. The resource growth that got us to that number came from a long strike discovery called Link, which is a previously unrecognised area at UME, but also in new lodes in the hanging wall to the existing resource, and they just needed more drilling and more work and more structural interpretation than they'd had previously been given. Just turning to metallurgy, obviously very important when you're considering going into production. So of the 3 million ounce resource, 800,000 ounces is in near surface. It's all oxide and free milling. And of the deeps resource, the 2.2 million ounces, 75% of that is conventional milling. 25% of the gold in that ore is associated with arsenopyrite, and so that requires extra oxidation. The good news is the arsenopyrite at UME reacts well before the pyrite, and so when we look at the historical processing operations at UME, with a sulphur oxidation rate of 33%, the arsenopyrite was oxidised to 95% oxidised. So that's where you get your gold. That's where we get the gold from. So there's very fast leach kinetics. We can get there in around 8 hours, according to our recent Albion test work. So looking at conceptual flow sheet, and this is developing as we progress scoping studies and feasibility studies. As I was saying before, concurrent open cut and underground mining. 900. So we're looking at a 1.2 million tonne per annum plant, 900,000 tonnes of oxide at around 2 grams. And a sulphide component of around 300,000 tonnes at a mine grade of between 8 and 9 grams. The underground material goes into a sulphide float and then into an intense leach, and that may be Albion or it may be another process. So the added oxidation process is only for a small amount of the overall material. So just recapping on our progress to date at UME, we've drilled 50,000 metres in the last 18 months, delivered a substantial resource increase to 3 million ounces, been discovering those ounces for $7. We've built a management team capable of developing the project, and we're starting to look at the more minute detail of building the project and financing the project. So next steps from here. To incorporate November and December drilling into a further updated resource. We're also updating our near surface oxide resource, and then ongoing metallurgical test work and plant design, as well as as well as exploration drilling. So April for the scoping study, and late this year for a definitive feasibility study. Thank you.